So, doing a live stream or two yesterday, and someone asked about taxes, and I had mentioned that if you go crypto to crypto, it shouldn't be a taxable event. It's once you go to cash and cash out, then it's a taxable event. That appears not to be true. There's actually guidance from the IRS back in 2014, and it was updated recently this year, like actually I think this month, October, because people were asking, well, what if you get forked coin? So I'm in a Bitcoin, I got 10 Bitcoin, then it forks into Bitcoin Cash and Bitcoin SV, and I've got 10 of those and 10 of those. Is that a taxable event or what? So they gave a little guidance on that. But also, well, what about airdrops? If I got airdropped, if it's considered an airdrop or not, so they're trying to answer some of those questions. But the main thing is this: taxable events for cryptocurrency. Trading cryptocurrency to fiat, like the dollar, US dollar, is a taxable event. Trading cryptocurrency to another cryptocurrency is also a taxable event. And you have to calculate the fair market value in US dollars at the time of the trade. Using cryptocurrency to buy goods and services is also a taxable event. Again, you have to calculate the fair market value in USD at the time of the trade. Earning cryptocurrency as income is also a taxable event, such as from mining or other forms of earned cryptocurrency. So if someone was paying you in cryptocurrency for something, they're saying that that's technically a taxable event, because cryptocurrency, they are saying, is not any kind of currency. It is private property, similar to, say, stocks or things like that. Therefore, it would be the equivalent of you buying the certain shares of a company. Let's say Amazon, right? Our favorite one to talk about. You buy Amazon at $1,000. It goes up to $1,500. You sell it. $500 profit for one share. So if you have $500 profit, there's your taxable event. You sold it. You bought it at $1,000. You sold it $1,500. The issue is, we're talking cryptocurrencies, and I know some of my friends on Twitter and YouTube and elsewhere, other people too. Oh, get this, for example, the Spend app or this app or that app, and go use cryptocurrency. We gotta, mass adoption. We gotta get people using this stuff. That's my little stop sign. Whoa! After just reading this. And this is from 2014, apparently. This is from the original guidance. And the updated guidance doesn't change any of this, what I just said. If you go and buy Litecoin, for example, and it doesn't matter what coin, pick a coin. You buy Litecoin today. It's $50. You go and spend it within the same year that you bought it. In other words, not the same year as in 2019. I mean, within a year's time, 365 days later. Today, all the way out to 365 days later. That is capital gains, right? Capital gains tax. So, not only are you going to have capital gains to deal with, remember, you've got short-term and long-term capital gains. Short-term capital gains, again, from what I understand, is if you hold an asset less than 1 year from the time you purchased it. So you hold it for less than 1 year and you've sold it within that time frame. Let's say for a profit, obviously, because if it's not for a profit, you're not going to get taxed on that. Matter of fact, you might have a write-off. But if you made profit, that falls under short-term capital gains. So if you're buying crypto right now and you're loading up your Spend app or any app for that matter and spending it, and the price of that crypto happens to have gone up while you spent it on something, cup of coffee or food or whatever, the difference of the price of when you bought it, let's say you bought a $45 Litecoin. Today, the price is $55. It's a $10 difference. From the time you bought it, it's only been a week, let's say. You went and bought some coffee or, bought some product with it. You spent it and it was worth a little bit more than what you bought it for. So not only did you just spend it on product, but you have to now pay taxes. Not only do you have to pay taxes, you're going to have to pay short-term capital gain taxes, which are more expensive than long-term capital gains. Long-term means you buy it and hold on to it for a year or more. Then you sell it, you're only paying the long-term capital gains tax, which is a lot cheaper than short-term. And just to get an idea, short-term versus long-term capital gains taxes. I want to see what the exact amounts are if I can find that. Here we go, Investopia.com. Long-term capital gains are derived from investments held for more than 1 year and are taxed according to graduated thresholds for taxable income, 0%, 15%, or 20%. A short-term capital gain results from an asset owned for a year or less and is taxed as though it were ordinary income. The tax on a long-term capital gain is almost always lower than if the same asset were sold and then a gain was realized. In other words, you got some profit in less than a year. Here's why. As income, short-term gains get hit with one of 7 tax rates that correspond to the 7 tax brackets. 5 of those tax rates exceed the highest possible rate, which is 20%, you'll pay on the long-term gain. And only taxpayers with a taxable income that's upwards of $434,000, single or married or filing jointly, are subject to the highest long-term rate. So if you don't make $430,000 a year and you're not trading enough to make your total gain $430,000, you might get hit up to 20%, even if you're doing short term. So I guess that's one kind of okay thing. Well, that's not too bad. But again, it makes you fall in the different tax brackets. But like I said, most of the time when playing with the longer term stuff, you're going to be safe because you can never go higher than 20%. And if you've got a crypto investment that turns into be more than $434,000, in other words, you bought in at $25,000 worth of crypto, a few years ago. In the next 2 years, let's say, oh my God, it's worth $1 million, or even $500,000, right at 500,000. Well, you only need 434,000 to start going up to the next highest bracket. The other thing is, what other income do you have? You still working? Because that counts too. Oh, you made 70,000 that year as well? Well, that's 500,000 plus 70,000. That's 570,000. You can potentially get hit, taxed on. So someone sent me an email and said, Joe, you need to check into this because what you said last night is not exactly true from my understanding. And I said, well, I thought going into a stable coin, because it's another crypto, you're okay until you finally cash out. Then you calculate it. Not quite. And even the guidance from 2014 is kind of touching on that. So it's nothing's really changed there. So I'm like, well, that's interesting. So if you're trading and I'm trading, I got my little trade bot going on, and it just did some trades the last few days. A few of them, maybe 3 or so, in, out, whatever kind of a thing. So I'm up a little bit or whatever, but it's not that I'm up. If I have 10,000, let's say I have $10,000, I put that exactly into crypto market, exactly 10,000. I made a bet. It went to 12,000. I got out. I've got $2,000 in profit now. It's the $2,000 in profit that we're talking about, getting taxed on or potential short-term, long-term, right? Because I was in one crypto for this amount of time, sold on that crypto, within days, sold right back out of it, whatever. That's going to be considered a short-term gain each and every time. But even if you have to pay short-term gain taxes, at the end of the day, like for my program anyways, this bot, whether you have to pay taxes, whether it's short-term or long-term, one way or the other, if the thing works out and it's putting us into profit, again, depending on your ultimate tax bracket when you have to report taxes at the end of the year. For example, at the end of this year, which is a couple months from now, let's say, again, playing with whatever. I've got a bunch of crypto. Let's just, again, I'm just throwing a number out there just to make it up. I got $100,000 in crypto right now, but I'm only trading with 10,000. And I've made over the next 2 months, I made a couple grand. My 10,000 that I'm playing with turned into 12,000. So I've got my 100,000 plus 12,000 now, but only 2,000 of that is profit. At the end of the year, I'm not reporting that I've got $100,000 in crypto because I'm just sitting on it. Just like I'm not reporting if I had stock investments. You don't report at the end of the year every single investment you have as if you're paying taxes on it. You haven't touched it. You haven't done anything with it. You don't have to pay on it. The $2,000 profit, I will more than likely have to pay the short-term capital gains tax on it because, again, we're trading in, out, and it's treated as short-term if you don't trade, if you're trading less than a year. I mean, imagine being in a trade for an entire year so that you can get long-term capital gain. It doesn't make sense to me. So as long as you're trading crypto, let's say, and you're not making somewhere around $500,000 a year or $400,000, let's say, you're probably going to be just fine. You're not going to worry whether it was long-term or short-term because of what tax bracket you fall in anyways. You follow me? So but I do want to say, and this is, some of my friends might not like this, to tell someone to, or say, hey, go get crypto, put it on a wallet, and then go spend it on items, food, groceries, whatever, at some of these stores that accept crypto. To buy that and do it, again, as soon as you make a transaction, you're guaranteed short-term capital gains because you're going to be buying something within a year, for God's sakes. So you're automatically in the short-term bracket. If I just took $20 out, so here's another argument you might say. $20 out of my bank account, my back pocket, I'm buying some grocery or whatever, I'm buying some coffee and some things today, boom. Let's just say it costs $20 even. It's $20, there's no taxing, and nor can I write that off, right? I'm going to get a drink of coffee and a lunch for myself today. It's not a write-off. It's simply I spent $20 today out of my disposable income. If you do the same thing with Litecoin or any coin, and you're using an app, you just bought it for $20, and it's now worth $25. Here's something that may not be too bad. Is it's up $5, so it's up, what is that, 20% or so? That little $5 difference. So you still spent $20, you got $5 left over. You're going to owe taxes on that little transaction. However, you're owing the taxes on that $5 profit short term. So let's again say it's 20%, because like I mentioned, you're the highest it pretty much could be is about 20%, like unless you're making a lot of money per year. You owe 20% of $5. So again, let's round that into a dollar. You got to pay $1 in taxes, but at least you still have $4. But you're going to have to technically keep track of all this, because when the tax man says, "Hey, it's time to pay," you know, in the apps and all those things should have that kind of information, I would think, hopefully, for you. So my thing is, if I'm going to play with crypto and I've got to keep track of all the stuff, like I said, I've paid taxes. I wasn't doing trading when I was in 2017 to 2018 when I paid my big tax bill. For this past year, when 2018 was over and I had to pay taxes for that year, I made out easily because cryptos were down, and I did sell a little bit to do some things, so I was like, I bought up here and had to sell some, a little lower kind of a thing. So I didn't have to pay those kind of taxes on the little bit that I moved. But do I want another headache of keeping track of everything that I bought with an app or card or whatever that tapped into my crypto account, capital gains, short-term, keep track of that just to start using the stuff? It's not currency yet. And I say yet because maybe it will, maybe it won't be. And if it is, it's probably not going to be Litecoin in them that'll be the currency. It'll be something like, the US dollar coin or something else, which you might be able to convert your coins into. But again, it's probably going to be a stable coin anyways. And then what? So I don't know. I don't see myself ever getting stuff on an app and selling it to have to keep track of that, have that headache. It's going to be headache enough to deal with any trade that you got in or out of, but at least the exchanges, even with my trading bots, using the Binance, it can use Coinbase, Binance.us, and Binance.com. Any of those, whatever one you pick, as long as you set your API keys up, whatever, it's done. But you go into the site any time of the year, pull up a report. Here's what you did. Here's your profit, loss, done. Have a nice day. And you can see, again, each transaction, whenever it's all calculated, here's what you did, pay taxes on it. Okay. Again, maybe some of the spending apps have something similar that keeps track of what you paid, what you moved over at the time of the, and maybe it's just another thing for you. Oh, well, that's not that big of a deal. I just one more spreadsheet to add onto this. Okay. But again, for me, if I'm buying Litecoin at $20, I don't want to go out and immediately spend it or within the next week spend it. I'm buying it as an investment. I want it to go up higher. I want it to go higher. Don't we all? I got a 10x on that one. I got a 15x. I got a 20x on that move. Man, I did great. Well, great. I don't want to go out and spend this stuff. And I understand, well, we got to get mass adoption. We got to get people using it. Okay, but they don't have to use it, like spend it. Tell them to buy it and hodl. Buy it and hold on. This is like stock. You don't tell people to immediately go buy Amazon and turn around and sell it just to get people into buying Amazon stock. I understand it's a new technology and we just want to get people familiar with blockchain and that sort of thing. So get it, use it. But again, imagine adding the complexity to someone newbie who doesn't know at all. Oh, I'm going to get taxed on this short-term capital gain. I don't even know what the hell I'm looking at. I don't even know what I'm supposed to do. The IRS just sent me a letter that they said this, and I don't even know what the hell they're talking about. That's not going to be too conducive for the average newbie to come out and start spending this stuff, So, anyways, bottom line is any kind of crypto transaction, it appears, is a taxable event. Short-term, long-term only matters if you've done it a year or more, a year less or a year or more. Less than a year, more than a year. But again, as scary as short-term capital gains may sound, well, you still fall in the tax bracket. That might not be too awfully bad. But here's something else they wrote in this article. Key takeaways: short-term gains are taxed as regular income according to tax brackets up to 37%, right? Depending on your bracket. And there's 7 of them, right? Long-term gains are subject to special, more favorable tax rates of 0%, again, depending on where your bracket is. Because if you make hardly any money, like let's say an older person that's retired, they don't get really income tax hit anymore, and they're in the 0% bracket, they could have long-term gains that actually, because they still didn't make enough that year, still be in the 0% range. You probably didn't make very much, obviously, that year, even in your profit, to stay in the 0 bracket. But again, it's a possibility. And then the next one's 15% or 20%, also based on income, right? So the most you can be taxed with long-term is 20%. The most you can be taxed with short-term, basically, is up to 37%. So 37%. But again, you making $500,000 a year or more? If yes, well, just take note. You can still make profit, and even if in your profit, if you're still able to, because again, your profit's your profit. There's no scenario that I can think of where you made profit in crypto or anything, and you got nailed with the 37% super high tax rate because you make $500,000 a year, plus you made another $200,000 in crypto profit, whatever, or crypto. The bottom line is, whatever your profits were for your trading activity, let's say, or your crypto activity, worst case is they're going to get 37% from you. However, they can't get that out of nothing. If you did some trades and you didn't make money, maybe, man, I did $200,000 in trades last year, but I only made $1,000 in actual profit. Wow, that's insane. Whoa. Well, guess what? You only have to pay that 37% on the $1,000. So $370 goes to Uncle Sam, and you get the rest. Nearly 600 or whatever. So, or 630, whatever the hell it is. So that's the worst case scenario. Got another little chart here. Long-term capital gains tax rates. The tax treatment of long-term 2018. Okay. So filing status. Again, it's all up to whether single head of household, married, it's either $434,000, $461,000, $488,000 if you're married filing jointly. If you're married filing separately, it's actually $244,000. Would be you're in the 37% or that potential 37% bracket if you're. Well, actually, hold on. Let me back up. This is the long-term rates. Okay, 0%. So this is pretty good. If you're filing single, you can make up to $39,000. I'm just gonna round off $39,000, and still pay a 0% capital gains. This is long-term though. If you're filing a head of household, you can file up to $52,000 as far as your income. 0% rate. This is all 0%. Married filing jointly, 0% rate is $78,000 for your household. Now, granted, that means both of y'all are pretty much working, right? $78,000 between two people, whatever. And then married filing separately is $39,000. So pretty much same as single. Married filing separately is about the same as single. The 15% rate, you can make $39,000 to $434,000. So that you only get hit for 15% on your capital gains. Again, long term. This is all long term. Head of household, 52,000 to 461. Married filing jointly, 78,000 to 488,000. And then married filing separately, 39,000 to 244,000. If you're going to pay the 20% rate, which again is the most you can pay with long-term capital gains, you have to make over, for single, over 434,000, head of household over 461,000, married filing jointly over 488,000, and married filing separately 244,000 again. So you can see there's some benefits there to hold on to something longer term. But again, for short term, again, depending on what tax break you fall in, which I've got in front of me right now, and this one goes from 10%, 1, 2, 3, 4, 5, 6, and then the seventh one's 37%. So again, you have tax brackets of 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So just to put it into perspective, if you had short-term capital gains, the closest bracket you fall in for what I want to show you right now is 22%. So in other words, to match it with the long-term gains of 20%, what would the income max be for me to do similar in short term? You know, if I'm a day trader or whatever, I'm trading frequently within a year. That's the 22% bracket. If you're single, they allow $39,000 to $82,000 income tax bracket. Head of household, $52,000 to $84,000, and then married filing jointly, $78,900 to $168,399. That's the 22% bracket. That's not bad. If you follow me, that's really not bad for you to be able to play a little trading activity, still get hit with short-term capital gains and say, oh, well, it's not that bad. Of course, a little differently, you know, again, with the 15, you'd have been a 15% rate easily in the short-term capital gain. So you're going to pay another 7% on top of it. But again, whatever. If you're in the profit, you're making this money, it is what it is. But again, for me, I don't know that I want to go get an app, put crypto on it to go spend it to then go have to calculate capital gains, taxes, or losses. Like, I don't want to do that. Because that's the other thing. You buy Litecoin or something else at $60 and it drops down to $48 and then you're spending it. It's a write-off. You now have a taxable thing that you could write off technically. I lost some money on that trade, but I bought some dinner that night. So now you have a write-off. But I'd rather not have a write-off. I'd rather have the $60 that I just spent in my pocket rather than pay $48 that used to be $60 and then have a write-off of, you know, $12 or so. And again, the write-off is just off of your top end, your bottom line. So it's not like you're getting $12 back. At the end of the year, a write-off means I get it back. No, it doesn't. It means it lowers your tax bracket potentially, which you owe in taxes a little bit, but doesn't give you $12 back because you made a loss. It's not that. So again, I'd rather have my $60 back than a $12 write-off. So anyways, that's my 2 cents. I hope that sums up some things for some people, because I just kind of learned something myself here. Thanks for this person emailing me. And I'm like, wow, this is going back to 2014. Why is no one ever talking about this? You know, because I guess the IRS really didn't say anything about it until people had started asking recently. So now it's coming back up. But am I going to stop trading all of a sudden because I'm going to be in a tax bracket short term? No. Profit is profit. And if I've got a little bot program that's doing it for me, I don't even have to get involved. And again, maybe it did some great trades, did some bad trades. Great trades, bad trades, broke even, nothing. And then at the end of the year, what did I do? Oh, I made $1,000. Man, I sure did. I traded $30,000 worth of crypto. Well, you made $1,000 though. I didn't have to do anything for that, really. I just, my bot did it. I'll gladly pay, you know, even if it was 37%, oh, the huge tax bracket. Oh, I'll pay that. Why? Because it happened for free. It's okay. I'll just log in, download my spreadsheet. Okay, here's what you owe. Here's what you made. Okay, I'll calculate that. I owe the IRS, $370 on that $1,000 profit. Put in my taxes. Have a nice day. It's better than not having $1,000 at the end of the year, isn't it? You know what I mean? So it's like, don't get scared away because you have to pay taxes of short-term taxes. Oh, short-term gains. Oh no. Profit is profit. You know, don't get scared away. But again, to go put it on a card or something or an app and then go spend it to find out you bought it higher, now it's lower and I want to go spend this. I'm not sure I'm so down with that, my friends. Anyways, I think I've yapped long enough. Take care.